Good morning. Let's see if I have it on. Yes. Good morning, everyone. I hope you can hear me okay. So, just to let you know, what we're going to go over is scanning for small stocks that anybody can scan for. And a lot of what you do is visual, but the other thing is you better combine it with market criteria. I just can't stress that enough. So I like to have three reasons to do a trade. So one of them is almost always a chart pattern, but you definitely should combine this with other things. So the first thing I thought I'd do is show you this. Like I said, just overall market perspective. Now, this is a tremendously minority view, but I want to show you the S&P on a daily chart. So what's happened? It rallied in anticipation of the Fed and also Trump gaining in the polls, more market friendly. Then you got the euphoria for the election, but you have the bond market going straight down. So I want to show you similarity. So like I said, this is a tremendously minority view, but it's my view. I've been doing it longer than almost everybody. But that doesn't mean I'm right, but I'll show you my view. To me, interest rates are a big deal. Forget about politics and all that. Interest rates are a big deal. If there are more deficits and more worries about terrorist with China and more worries about cheap labor going away, you're going to get inflation, which is going to keep the bond market weak. So this is what I want you to see. I bet everybody in here, whether it's the YouTube room or the essentials, if you go back 50 years and you go back to Reaganomics, everybody's saying, oh, yeah, that was great for the economy. Well, it was eventually, for the stock market. But look what happened here. It rallied into Reagan, gaining in the polls, the euphoria rally, and then the 10% correction starting December 1st. Now, in the meantime, the bond market was still getting hammered for exactly the same reason it is now. So worried about inflation. What happened? For 18 months, the stock market went down. So the stock market went down 35%. So all the stuff you've read about Reaganomics, now don't forget, after Volcker lowered rates in 82, the market exploded. But it took a long time to work off that bond market sell-off. But all I'm showing you is that euphoric rally, very similar to now, and then you had the sell-off. Now, that doesn't mean you're going down whatsoever, but this is what it means to me. You look for the cross. What do I mean by that? If you get bearish, you look for that kind of trend line cross. You can find them for the last 50 years. Every trend line cross. Everybody wants to sell on the way up. You want to sell on the way down when it has a defined trend line. A defined trend line is at least three touches, and then a break, and then a rally back to the resistance. Look at that. Textbook. Never a break here. So I'm just telling you that works. So let's go into here. Here you go. Sell off, rally to the break. Why? Because the first sell off like that usually creates an oversold condition. It's the bounce back rally that matters. So just keep that in mind. So let's go back to 1980. There you go. So you had everybody thinking we're going up. You had the breakdown after you could draw a defined trend line. And believe it or not, you tried to test it. But I want to go into an even shorter one for you. That one right there. Does everybody see that? You got the high. You got a little sell-off to make the bulls a little nervous. You got a test of the high, so now everybody thinks the market's never going down, which also corresponds to a lot of bullishness. You get the breakdown, you get the ugly sell-off, you get the rally to the resistance, and then the market went down for 18 straight months. Just keep in mind the whole thing about a Santa Claus rally is keep in mind December 1st to December 15th, the market went down over 10%. It then rallied into Christmas and then it died. But the biggest key is that the market had the euphoric rally into a rally into the election, then a euphoric rally while the bond market was still going down. So just keep that in the back of your mind. So if you see a trend line break, I just wouldn't buy on the way down like you see a lot of sites doing. So just keep that in mind, especially if the bond market stays in a bear market. Keep in mind, since I started in the business, the bond market has been in a bull market for 40 years, ever since August of 82 until now. Until that, the stimulus from the COVID. So supply chains all screwed up, inflation in the pipeline. It broke a 42-year uptrend. Just keep that in mind, really 40-year uptrend. So every rally should be sold in here on the bonds. So just keep that in mind. I have no idea why they're not back down to 91. But with this and the market going parabolic, it's an extremely dangerous situation. Don't get me wrong. We've made a lot of money on the long side, no doubt. But you got to have that in the back of your mind. So fast forward to today. How does that help you today? Well, the first thing is we look a lot at things relative on a daily chart to their 20 moving average and their 50 moving average, or the 49. Long story with the 49, it's just superstition. What you see in here is that a lot of indexes follow each other. So if you see on the right, if you see like the Dow and you see it plunging like it did here under a 20 moving average, then it's more likely this is going to plunge. They all seem to work together. Right now, you can't tell a darn thing. They're all above it. The ES, the NASDAQ, the Russell, they're all above it. For daily charts, I use a 20 and a 49. I want to make that clear. I use a 20 and a 49. So just keep that in mind. So just to let you know, so that's number one. Do you see anything in here that looks different? Well, I'll show you. On a daily, you don't see a thing. They're all over this, no doubt. But there are some definite danger signs. So let me show them to you. Everybody and their mother says the Russell should rally right now. Well, I want to show you that the worst performing index in the last week is the Russell. Look at that top. There's your trend lines. That's why I showed them to you. There's your rally to test the trend line. So on a 4-hour chart intraday, I use the ATR trailing stop exclusively. And what you're going to see over here, so give me 1 second. So what you're going to see over here is this. You're going to see that this is decisively under its ATR trailing stop. Now, that doesn't mean anything this second because you have a lot of open interest over the market. But this is under the ATR trailing stop. Like I said, I use the ATR trailing stop in relation to other indexes. So that's what I do in here. So give me 1 second. Yeah, no, I'm fine. All right. So what I do in here is this. If this goes down enough like it's doing now, in the long run, well, it's a big warning sign. Let's just put it that way. It means I can't go pedal to the metal long. If this goes down, this is more likely to go to the ATR trailing stop. The only reason it isn't right now is there's a lot of open interest. I went over that on Monday about how to interpret open interest. There's a lot of open interest over the market. That's why the markets aren't really going down. But this is a big warning sign. Lots of people watching that Russell. Just keep in mind the Russell right now is where it was November 6th. I know that's hard to believe. November 6th, that's like the ES being down 100 points. I'm not saying it is. It's not acting like it wants to go down, but it's a big warning sign. So that's number one. You have that big warning sign. So what I show you with a lot of stocks I'm looking at on the long side, you have to put it in perspective. You have to put it in perspective that this is a warning sign. So, now if this was up here, I'd be a lot more aggressive in the Russell. I mean, in stocks, in Russell stocks. So just keep that in mind. So let me show you what we're talking about. So this is what I want to show you. And by the way, Mirza, do you think that somebody shouldn't be advertising on the YouTube channel for their site? Like 4XB, do you think you should kick them out? So when I'm broadcasting, it's not to advertise other sites. So just to let you know, I already took care of it. So what else are we doing in here? What we're doing in here is definitely, you see the markets don't want to go down. The biggest reason they don't want to go down is open interest over the market. I mean, that's what I see. Doesn't mean you're going up, but you sure don't seem like you're going down. Because the Russell's going down, you're just not seeing that kind of oomph on the downs, on the upside, especially with the small stocks. So just keep that in mind. So that's what I'm seeing. So in here, but I'll show you the scans anyway. A lot of times when you get these big breakouts, so I just showed you when this sold off, it tested this. Well, it works the other way too. So you have net trying to hold some kind of breakout, trying to hold here. What else has that similar chart? I'll show you. So give me 1 second. All right, so this is the one on the right. And like I said, you're not going to get the oomph of the ES on the upper right if the Russell is doing that. Just keep that in mind. If the Russell is doing that, you're not going to get the ES. The only thing that's good for the ES is the open interest above the market. So keep that in mind. But this is what I'm watching. I'm watching stocks that are breaking out and then testing their breakout. On the other hand, if this Russell stays down, it's going to be hard for the broad market to go up, and it's hard for these to go and test the high. But that's the kind of stuff I'm looking at. I'm looking at things that are selling off and testing support. So I just can't stress enough of not chasing strength in this market. You can't chase an overbought market. What you want to do is you want to chase after the consolidation. There's your rally. There's your consolidation. So just keep that in mind. On the right, yeah, you had the rally. I wish it had a tighter consolidation. That's what I'm watching. So that's where I am at the moment. So just keep that in mind. So what else are we watching in here? What we're watching in here is, will the Russell rally? I mean, I don't know about you, but that's an incredible disappointment after the election. Now, unfortunately, bandwidth issues are hurting me again. Like I said, this is about talking about small stocks. I'm not going to talk about Nvidia. Nvidia, that can be on, that's like I said, I'm not giving opinions on things when I'm in this room. So this is, we're scanning for small stocks. The only thing I could tell you about Nvidia, better hold the breakout at 145, 145. That's it. But right now, we're going to scan for small stocks. So let me just show you. Like I said, the lower the Russell goes, the more likely it is the ES goes down. So we're going on comparisons in here, and we're scanning for stocks that historically go up at this time of year. So just keep that in mind. And like I said, Nvidia is acting fine, but the whole market is a warning sign when the Russell is getting nailed like this. So just keep that in mind. So like I said, the Russell is a massive warning sign. I know nobody wants to believe me. So everybody only knows how to buy, it seems like. There's a time to buy and a time not to. There's a time to be scared a little. Now, I don't mean scared like the market's going to crash. I'm talking about being cautious. You want to be a little cautious when there are divergences. That's a big divergence. That's all I mean by cautious. So, but I will go over, I want to go and show you on how I scan for small stocks, because historically they go up at this time of year. Historically. So all we're doing in here is this. We're going into industry X funds. We want the average volume, let's say over 300,000. Now, there are a number of ways to do this. In this environment, a lot of stocks that aren't optionable have been going bonkers. So what happens is you get a pop, and then you want to see them consolidate. I mean, that's what you're looking for. So, and I'll try to show you a number of these. So like I said, this is about scanning for small stocks. So just keep that in mind. So what are we doing in here? Number one, and by the way, if you're able to see the recording, I go back to Monday and see on how I showed about open interest in Nvidia. So in here, all I'm doing is this. I'm taking stocks over 300,000 X funds. I'm taking the price over $2. That's a personal preference. That's all. Personal preference. That's a lot of stocks. We're not going to go over them all. But now what I want to do is take stocks that have reclaimed their 50 moving average. So at least they're in somewhat of an uptrend. The other thing, we're looking for small stocks. So let's go back to descriptive, and we're going to take between 5 and 50. 5 and 50. So in there. So like I said, I can't give recommendations in here, so that would have to be on a different site. So I'm sorry, but I just can't give a recommendation on a stock. So sorry. So this is what I'm doing. I'm taking stocks that are in an uptrend. My idea of an uptrend is going on over the 50 moving average. So, you know, in here. Now, also keep in mind that if you're in a stock that's a great stock, just keep in mind that if the whole market sells off following the Russell, The only way it's going to sell off is if the big stocks sell off. But keep in mind, Nvidia has earnings next week. So I'm not going to get in the middle of that. I don't bet on earnings. So just let you know, just don't bet on earnings. Just keep in mind, though, that if the Russell is under this decisively, the only way the S&P is going to get it under it decisively is if the big stocks go down. Now, this could still be a bull flag. I mean, it could be, but I'm just telling you it's a warning sign. So getting back to it, you have 793 stocks. I'm obviously can't go over that, but I did build a big old watch list, which is in our chart patterns mastery room. But when you go through this, you're going to see there are a number of them that broke out. The problem is if they're too far from their 50 moving average, you don't have much of a backstop. You just don't. It's real scary. And you can see that with a number of these stocks. I'm going to go and show you because we've been in these. So we're going back to a 49 moving average on a daily, not an hourly, not a 4 hour. And now I'm going to show you some examples. NNOX. We're in it. But do you see on how far it got from the moving average? So we were out. We got in today when it touched the moving average. So, and it wasn't the moving average we cared about. We cared about the prior breakout. Prior tops become support. That's why we're in it. So just let you know, that's how we look at that. FinViz is free. I haven't even signed in. So, I mean, I haven't even signed in. Don't do the FinViz premium. You don't need it. There's so many sites like this that are free. So all I'm doing in here is I'm looking for stocks that have done this. I'll show you. That's hard, but we're in that type of environment where they could go up, but they're a lot better rally when they consolidate near the 50, when they catch up with the 50. Scary up here. And I don't mean scary like you shouldn't buy it. I'm just saying risk reward isn't. I get extremely cautious when it's too far from the 50 moving average. So what on earth is UPXI? All I know is I bet everybody wanted to buy it up here. It's too far from the 50. Now it's testing the 50. Now keep in mind, a lot of these might be garbage stocks, but if you're going to initiate, you want to do it near the support. In fact, I got to go look this up. So I'll show you a couple of ways to look it up. Number one, when I buy something, I do not buy on the way down. If I do, I look for the reversal pattern on the way down. So it reverses and then consolidates. That's what I look for. So let's just take this stock, UPXY. I have no idea what they do. All I know is the stocks that have very little shares outstanding have been moving. Even if they don't have a lot of short interest, they've been moving. Share float, 0.76 million. Average volume, 845,000. Yep, it's trading more average volume than their float. That's pretty impressive. So yeah, Jack, that's up your alley. Now, just to let you know, Jack does a lot of contributing on our Chart Patterns Mastery site, and he's turned me on to a lot of these small ones like, was it Drug? Yeah, that went from nothing to 70. What did it have in common? Very little share float. So now it's scary, it's very dangerous to only buy something that has a high short float, because it's usually after they start going up that they really start going up. So you can't just blindly buy them on that. But let's go back to this stock, UPXI. I have no idea what they do. So the first thing is to see why it went up. Did it have something? No. Let me just tell you, do not buy stocks that have a reverse stock split. Just keep that in mind. Scanning parameter, I just showed the scanning parameters and I shared it up there. So just to let you know, just shared it. So it's just shared in Finviz up there. So just shared it for you. The biggest losses I've had in my 44 years of trading are buying stocks with reverse stock splits. So take that off your screen. So that's out. So I always look at news on these crazy ones. So let's look at some more. So all we're doing is this is all just, like I said, I copied and pasted it for you. So it's in there, the scanning parameters. There's a perfect example, EXAI. What did it do? It rallied up here, and now it tested the breakout. So that's an idea. So that will go on my watch list. Now, I don't want to buy 8 million stocks. And look what just happened to the ES, by the way. I just called it for you. That if the Russell goes down enough, the ES is going to listen. So I hope that worked for you. So that's exactly what I'm talking about. Probability. If the Russell goes down enough and the Dow, which also has a similar chart, goes down enough, then the ES is going to go down. So just keep that in mind. That's why if I'm showing you scans, it doesn't mean to go crazy with them at this moment unless you have some shorts as well. You got to have some shorts in this market when you have those divergences. And that's what we're doing in the other room. So BBAI, we're long, but we're also long XSP, which is 1/10 of the SPX, puts. Yeah. So we're long puts. So we're long puts for tomorrow. We're long puts for today. So we had this on for $1.18. We got out of it at $1.20, back in at $1.25. Right now it's $1.55. In fact, our last 6 index trades have been profitable. In fact, our last 30 were 28 out of 30. Just to let you know, 28 out of 30. So this one's up about 20%. So the one for tomorrow, what's that one doing? There, that one's up 20%. So how about the one for the end of the year? There, that one's up 10%, but it's a $4 one. What's the moral of the story? We're long puts against stocks. That's it. We're long puts against stocks that look like they're testing their breakout. And the only reason they might not work is if the whole market craps out. So just keep that in mind. So that's what we're doing. We have on, this is 1/10 of the SPX. So if we do a butterfly like this, where we're taking advantage of premium, like I said, I've done this 44 years, and the best way to make money is selling premium. If you want to bet on the market going down, then do it in a directional butterfly. So keep in mind, this is like buying the SPX for $21. So I could buy 4 of these and you sell half. That's why I like playing the XSP. And keep in mind, this is not a 20-cent option where I'm showing you if it goes up 5 cents, you make 20%. These are $2 options. The reason I'm showing you that is the commission is $1.80. That's it. If I buy a 20-cent option, yeah, it'll chop you up. So far, so good on all of these trades. So just keep in mind, while the markets are going down, while they're going down, the stocks we're in are going up. So we're short the indexes and we're long the slop. So sorry if I call it slop. If you work for those companies, I apologize. But I'll show you what we're talking about. And like I said, it's all probability. So what I mean by probability is the probability of the ES breaking up. I just caught it for you while I'm on live. The probability of the ES going up goes down dramatically if an index I'm watching is going straight down. Look at this divergence. Look at that divergence. And that's why we're short the S&P. The only thing going for the S&P is the open interest above the market that expires tomorrow morning. But like I said, the lower this goes on the right, the less likely on the left this breaks up. As you see on the right, this has no semblance of a bull flag anymore. There are a number of people that think this is a bull flag. The probability of that being a bull flag goes down dramatically if this is already breaking down. As you see, the ES is on its low now. So chart patterns mastery, we're still short. So on the other hand, we're long that. Then we're long that. And we're long that. So we have longs, don't get me wrong, but we have to have shorts. I just can't stress that enough. And we do. So like I said, there are too many dangers. What's the next danger? This is the next danger. I mean, and I might play it later. Here's the ES again on a 4-hour chart and a 1 hour. The Russell is all the way down here. All right, it's all the way down here. Go and check out on the left an hourly chart. Yeah, this better hold here. If it doesn't hold there, you're talking about a 50-point sell-off. So that's why we have some bearish patterns on. So just keep that in mind. Jack, regarding XSP, what's our track record in that? I think it's like 22 out of 24. Positive. Yeah, it's pretty good. Better than most. So, and we'll play it both ways. Don't get me wrong. So as you see, the lower the Russell goes, the more likely the ES goes down. Doesn't mean it has to go down, but the more likely. So is there any other index that looks like the Russell? Yes, the Dow. Now you got the Dow doing the same thing. So if this goes down enough, then that breaks, that breaks, that breaks. And that's why we have shorts on. You just have to. Now, the only thing going for the markets, in my opinion, is it's relatively slow. We're in a historically strong time of year. Don't get me wrong. I understand that. That's why we have longs and shorts. But I'm telling you right now, I better see that Russell start to stabilize. So, I mean, that's what I'm watching. I got to see it stabilize, which you're not seeing yet. I'm just saying. And that could go here. And then if that goes here, then the probability of these breakouts working goes down dramatically. So just keep that in mind. We're long net, which is on its intraday high. We're long BBAI on its intraday high. Here we go with another one. Rallied, sold off to the breakdown. And now you have a real lift then. If the Russell does rally, these will probably be the leaders. So I'll show you on how we build the watch list. So all we're doing in here is we're taking stocks that on FinViz I'm seeing look good. Like I said, I put hundreds and I pare them down. I don't make everybody do them. I try to pare them down. So like I said, though, the scary thing is buying too many of them unless you're hedged if other indexes are rolling over. So you can't buy too many. But, you know, you got to have them up here. So let me just show you again. All I'm doing in here is I'm taking stocks that are selling off to support, but then looking for the reversal pattern. So I'll show you what we're talking about. We'll take First Solar, but not now. Now, let me tell you another thing why the Russell's down. This is my opinion. You don't have to believe it or not. So there are a lot of algorithms that key off certain words, like takeover, or they key off tariffs, or they key off hardliners. So when 2 days ago, Bloomberg kept highlighting hardliners. So I'm not saying they are, I'm not saying they're not, but hardliners appointed by Trump. So when that Senate, that word made the rounds on Bloomberg, there are algorithms that tie into certain keywords. So the second that you saw the word hardliner, you saw Alibaba go down, Baidu go down, biotechs go down, and solars go down. It's not a coincidence. So like I said, I am not saying whether anybody's a hardliner or not. I'm going on keywords and how the market perceives it. Now, a lot of people think that's going to hurt small stocks. I'm not sure why, but they are. So hardliner also hurts small stocks. So just keep that in mind. Keep that in mind in there. And I think it's a big deal, and it's something you have to keep in the back of your mind. So like I said, the lower the Russell and the Dow go, the more likely the ES and the NASDAQ go down. And like I said, it's all about, it's all about probability. So now I'll tell you, if you see a stock that's gone straight up and it's not near a moving average or whatever, and you have these warning signs, then I would only look to buy the stocks that held support, that are already at a backstop. I mean, that's what I do. So, I mean, that's what we're doing. So I just want to show you that. So let's go back into them, and I'll show you on how I build it. So AVAA, you see what we're looking at. You're going to miss things. That's just the way it is. So like I said, keyword. So you're going to see this. It's fascinating. Hardliner keyword means people are worried about biotechs. Go and put in biotech instead and watch what happens. You have 70 stocks over its moving average. All right. But I'm going to put every stock, every biotech, and I'm going to go and put even the ones under the 50. And I want you to see the most expensive of what's been going on. If the most expensive go down, then the cheaper ones aren't going to go up. Look what's going on. I mean, BNTX, that's about the best looking one. This is what you're looking for if it's a 50-cent stock or $500 stock. You're looking for a rally and then a sell-off to support. There's one. But look at the rest of them. SRPT sold off over 10%. I'm going to put this on the bottom. CRSP. After that keyword, it sold off $10. So always watch that kind of stuff. Always watch that kind of stuff. So watch the expensive ones. And like I said, keywords seem to be mattering. It doesn't mean I agree with it. Just means that's how traders are perceiving it, algorithms. So the algorithms see hardliners, they're dumping the biotechs. So now, what's that mean to me? Well, it means to me that how about healthcare instead? And that's exactly why we're in NNOX. They do x-rays. They don't do biotech. And that's one reason I'm in it. BBAI, what the heck do they do? I'm not exactly sure. AI, look at that little AI in there. So that's why I'm in this. As you see, it backed up right to support. Right to support. That's what you want. You actually want it more like this. That. So what did it do now? It did it again, but now it went to support. That's why we're in those. So just keep that in mind. So let's go back into it. And we're going to go, instead of biotech, instead of everything, we're going to go into healthcare. We're going to make it easy. We're going to take stocks between 5 and 50, average volume over 300,000. And we're just going to take healthcare. And like I said, not biotech. So X-ray would be in there. And we're going to take the ones over the 50. Usually healthcare, these stocks do pretty well, non-biotech, at the end of the year. You see, some of these are doing great. There, that's diagnostics, not biotech. I'm telling you, they're keen off the biotech to hit them. If the big biotech stocks are selling off, you don't buy the cheap ones. Usually what happens is people make money in the big ones, and then they roll out of those to get in the small ones. So if the big ones are getting killed, you don't touch them. There. I have no idea what that does, but that looks pretty good. That's what we're talking about. We want it to consolidate as a defined bullish pattern. So I'm going to put that on my list. I don't like its biotech, but it's holding. So it goes into our list. There. So we have a number of them. I just don't think it's the right time to buy them unless I see some conditions change. If I see that Russell way up, I'll take off my hedges in the ES and the NQ. I mean, that's the way I'm looking at it. So just keep that in mind. And I'm telling you, if that Russell does not come back, then I think the probability is this ES will be down 40, which means we might be too right on our hedges. So just keep that in the back of your mind. So just keep that in the back of your mind about what we're going to do. This easily could be down 30. So just, I got to be real careful. Like I said, the lower the Russell goes, the more that this bear flag might work. And if that bear flag works, then it's going to take out the hourly bear flag. And this is going to be down 30 or 40. You heard it here first. So just keep that in mind. If you see this, this is what I don't like buying premium. But when I see this about to really break, I don't have a problem going in trying to buy some premium somewhere. Or just going and doing a real directional one for tomorrow or today. We're already in one, and now I'm getting nervous about we're too right. So I'm actually going to roll out of this one. So the one we bought at $1.18, sold at $1.20, bought again at $1.25, and it went lower. But this could easily go to $5.94. And it's already breaking down. I'm going to try to sell it. There. So chart patterns mastery, we took our about 15%. And now we're going to get into a different one. So let me actually go into chart patterns mastery and tell them what I'm doing. I'm going to go and do this one instead. I'm going to do it around 596. So chart patterns mastery, if you're tuning in, this is what I'm doing. That's betting on another 10-point down move. Now, the problem is how low could the XSP or the SPX go? Maybe we're doing the wrong one. That sure looks like it could go to 594 right there. So let me go into chart patterns mastery, post the exit, and then do another trade. So just let me go and do that. There. Like I said, the lower the Russell goes, just go on the date right here. Where is it? It's where it was November 6th. Just put that right here. Where would that put the S&P? Put it right here. Yeah, I might overshoot. So that's what I'm watching. And just keep in mind, like I said with Nvidia, if this is going to work on the right, where it goes to November 6th, for the S&P to go to November 6th, or the NASDAQ to go to November 6th, which is down here, then you have to have the big NASDAQ stocks go down, which means Nvidia, which means Apple, which means Meta. Now, why is Meta and Apple holding up? Because they have big buybacks. The end of the day should be exciting. We'll be playing those. So just keep that in mind. Like I said, one of the biggest things is to watch all this. I'm just can't stress enough that if you want, I've been doing a long time and our track record is great in our room. I don't usually promote myself, but so far it's pretty darn good. So I'm just telling you, the lower this goes on the right, the more likely this goes down on the left. That's why we're short. So like I said, this is real close to having an air hold to the downside. That's why we did XSP. In fact, I should have done it even lower under the market. Here, Chart Patterns Master, I got out of another butterfly. This one we took 20%. Now, let me go and post that for you. Sorry I'm quiet, but I have to post this. I'm an extremely active trader for everyone. So that's a good one. So far, what is this? 6 for 6. We'll keep this going. Like I said, it's all about percentages. And the lower the Russell goes, the more it's a layup that the markets are going down. Just keep that in mind. Yeah, BFLY was a good one. So thanks for posting that, Austin, in the YouTube room. Now, like I said, this could overshoot to the downside. Got to be real careful in here, as everybody and their mother is long, like you know. So because, historically it goes up. That's why I showed you 1980, and I showed you the correlation between the Russell and the NASDAQ. If the Russell is here, then the NASDAQ stocks have to go down for this to be able to break. So just now the ES is under the ATR trailing stop, but not on a 4-hour. This isn't. That gets you another 10. So that's what I'll be doing in the background, deciding if we should do even more things on the downside. So Chart Patterns Mastery, this is going to get extremely busy. So just keep that in mind. Why am I not touching Apple? They have a big buyback. Meta, we're already short. Just keep a lot of these in mind. It's a big deal in here, what's going on and how far down the ES can go. Also, keep in mind another thing, because it's a big deal. Support zones do matter, but on the way down, if some groups are going down, like a water leak, then you can't buy on the way down till you get a valid reversal. Here's a valid reversal. On the way down, it reversed bull flag, reverse bull flag. Now you have nothing. You have no reason to buy in here, the ES. In fact, you have reasons to short. So I hope you see that. So what are you seeing? Exactly what I was showing you. This is just sold off $1.50. I told you don't buy it. Lamb Research just sold off $1. Meta just sold off $3. And Netflix just sold off a lot. And the reason is if NASDAQ is going to follow the Russell, got to have the big NASDAQ stocks going down. And that's exactly what's happening. And don't get me wrong, there's going to be a lot of speculation, but I really want to see this if its lower objective, which would be the ES down here. Let's just show you. We're going to take non-24 hour. I'll take the IWM, and on the left, I'll take XSP. And I'm going to take an hourly chart. So there's your November 6th, 590. That's 7 points. Wow, that would be wild. Just keep in mind right here, that's November 6th. That's the gap up on November 6th. This is the gap up on November 6th. And at the minimum, the gap here, that's 595 at the minimum. So where's the QQQ? Non-24 hour. That puts it right here, down about 2.5 points. If that happens, then I think you see the Nvidias and all that follow as well. So take care. Thanks for being with me. I hope you found this enlightening and see how an active trader trades